You know, in the world of finance, there are some things you just don't expect to see. An ancient physical metal and a brand new, totally digital currency rallying at the exact same time. I mean, it sounds like a total paradox, right? But that is exactly what's happening. Gold and Bitcoin are moving together in this really strange, unexpected way, and it's making some of the biggest names on Wall Street completely rethink what value even means. So here's how we're going to break this all down. First, we'll dive into the mystery of these two, let's call them unlikely allies. Then, we're going to unpack the classic reasons for gold's big surge. After that, we'll connect the dots and see how that same logic is being used to build a surprising new case for Bitcoin. We'll also hear from the skeptics, because not everyone's on board. And finally, we'll explore what this all means for the future of safe investments. All right, let's kick things off with this odd couple. I mean, think about it. On one hand, you've got gold, something you can literally hold in your hand, a store of value for thousands of years. On the other, you have a line of code, something that's barely a decade and a half old. On the surface, they could not be more different. And yet, something is pulling them in the same direction. And just look at the numbers. They are wild. Gold, the classic safe bet, is up an incredible 39% this year. For a stable asset like gold, that is a massive move. And then you've got Bitcoin, up 22%. Now, to put that into perspective, the S&P 500 is up about 12%. So both of these are just blowing the wider market out of the water. This is not normal. So that really is the million-dollar question, isn't it? What is going on here? What in the world could be the common thread that's pulling these two total opposites in the same direction? And with so much force? Well, the answer actually starts with the old school player in this story. Okay, so we're going to start with gold. And trust me, to get the new pretty radicals case for Bitcoin, you have to understand why investors are flocking back to this old school asset right now. It's a classic financial story, but it's playing out in a very modern way. And it really boils down to one simple thing: fear. According to analysts at JP Morgan, the main driver here is the fear that the US dollar is going to lose its value, its purchasing power. So investors are basically buying up gold as a kind of financial insurance policy. So what exactly is dollar debasement? Let's break it down. It's basically when your money just doesn't go as far as it used to. You know, a dollar might buy you a coffee today, but if the dollar gets debased, in the future, that same dollar might only get you half a coffee. When investors start to worry about this, usually because of things like inflation or government spending, they look for places to park their money that are outside of that currency. And for centuries, gold has been the #1 spot. And check out this quote from JP Morgan, because it really gets to the heart of that fear. They're connecting the gold rally directly to worries about what the Federal Reserve might do. The thinking is, if the Fed decides to let inflation run hot to try and boost the economy, that could really weaken the dollar. And in that scenario, gold is seen as the perfect protection. And look, this isn't just some abstract theory. They're putting their money where their mouth is. JP Morgan, which happens to be the world's biggest bullion dealer, is putting a huge price target on gold. They think it could hit over $4,000 an ounce by next summer. That's a massive vote of confidence in this whole dollar debasement idea. Okay, so the case for gold is pretty clear. But how on earth does this lead us to crypto? And this, right here, is where the story gets really fascinating. We're going to build a bridge from gold, an asset everyone kind of gets, straight to Bitcoin. And we're going to see how some of the smartest analysts in finance are now using the old standard to make a powerful new argument for the digital upstart. Right, so how in the world do we get from a rally in this ancient metal to a new valuation for a digital currency? Well, according to JP Morgan, that connection is getting surprisingly direct, and it all starts with a fundamental change in how Bitcoin itself is behaving. Well, the first piece of this puzzle is what some analysts are calling the hoarding effect. See, a totally new kind of buyer has jumped into the market: big corporations. And these companies are buying up tons of Bitcoin and just holding it. They're not trading it, so now over 6% of all Bitcoin is essentially locked away in corporate treasuries, taken right off the active market. It's kind of like a private sector version of quantitative easing. It shrinks the available supply and totally changes the game. And all of that hoarding has had a huge, direct impact on Bitcoin's biggest problem: its crazy volatility. You know, those wild price swings, they've been cut in half this year. Which brings us to this key number, 2.0. That's the ratio of Bitcoin's volatility to gold's, and it's at a record low. For the first time ever, Bitcoin is starting to act less like a risky tech stock and a lot more like a traditional store of value.
So, this is the logical next question analysts are asking. If Bitcoin is starting to act more like gold, shouldn't it be valued more like gold? And here's the mismatch they're pointing to. The total value of all the privately held gold in the world is about $5 trillion. Bitcoin's total value? Just 2.2 trillion. When you factor in its new, lower risk behavior, that gap starts to look, well, pretty big. And that brings us right to JP Morgan's big conclusion. Based on this new gold-like stability, they're arguing that Bitcoin is just plain undervalued compared to gold. To bring the two into alignment, Bitcoin's price would need to jump about 13%. So this is a valuation model that's not built on hype, but on a direct, apples-to-apples comparison with the world's oldest financial asset. Okay, so that is a really compelling argument, right? But it is definitely not the whole story. To get the full picture, we have to look at the other side of this trade. Because while some analysts are busy connecting these dots, there's a really important group of investors that remains deeply skeptical.
So is everyone buying this new digital gold story? Has this gold-based case won over the entire investment world? Well, the short answer is no, not by a long shot, especially when you look at where the oldest and biggest pools of money are.
Just take a look at this. It's from a Goldman Sachs survey of family offices. We're talking about the folks who manage the fortunes of the super rich. A staggering 2/3 of them have zero, absolutely zero exposure to crypto. So despite all the headlines, despite all these sophisticated arguments, the smart money is, for the most part, still sitting on the sidelines. And this really gets to the core of why. It is all about perception. Almost a quarter of these wealthy families say they buy gold specifically as a safe haven, as a hedge when things get uncertain. But they see crypto as the exact opposite. They see it as a risk-on asset. It's something you buy when you're feeling good and want to speculate, not something you run to for protection. For them, it's still a hazard, not a haven. All right, so on one hand, you've got this super bullish case for Bitcoin, built on the logic of gold. And on the other, you have this deep, deep skepticism from some of the most conservative investors out there. Let's step back for a second and try to figure out what this all means for the future of value itself.
All right, so let's recap what we've seen here. First, gold is having a moment, rallying hard on those classic fears about the dollar losing its value. This, in turn, is creating a whole new playbook for Bitcoin, where big companies are hoarding it, taming its volatility, and letting analysts value it like digital gold. But, and this is a huge but, the ultra-wealthy just aren't buying it yet. For them, gold is still the only real safe haven, and crypto is just another risky gamble. And really, that leaves us with a huge question for the future. We're literally watching the lines between old and new, between physical and digital, just completely blur. An argument for an ancient metal is now being used to make the case for a digital token. So what will a safe haven even mean in the years to come? Will it be defined by thousands of years of history, or by pure mathematical scarcity and decentralized code? That is the multi-trillion-dollar question the market is trying to answer right now.